and yes, we did get above 20,000.
We finally did it. We can stop talking about it.
We can stop talking about it. It finally happened. Actually, it happened right at the open, maybe 2 or 3 seconds after the open.
Right.
It held above that level, and as you can see there, 155-point advance for the Dow. If you come inside the Bloomberg, what's interesting here is that in the lead up to Dow 20,000, at the end of last year, following the election rally, we had financials really leading the gains, industrials. Since then, in 2017, the best performers, Boeing, Visa, IBM, these were not the names that led the way during the post-election rally. In fact, Visa was the worst performer in the Dow Industrials from the election until December 31st.
There's some rotation on that front.
Some rotation going on. And speaking of rotation, let's look at the sector gainers here. These are some of the leading advancers. Financials for today are up by 1.7%. Industrials also doing well, up 1.1%. And technology, of course, in focus because we've got a lot of key earnings throughout this week. Google, Microsoft, Intel, and of course, next week you've got Apple as well.
Let's take a look at government bonds. Higher rates across the board. Nice, really solidly higher. 10-year yield there in the middle, 2.52. Remember, it's really been going back and forth. Earlier in the week, it was down significantly. Now 2 straight solid updates. Very consistent with the sort of classical risk-on theme of people buying equities and selling treasuries. And German yields continue to press higher, now up to 0.46. Huge gap still between Germany and the U.S., but significantly higher than it's been.
And take a look at the Mexican peso. This was a big mover today. The Mexican peso, catching a bid here. Yes, Donald Trump signed an executive order to start building the wall along the Mexican border. You would think that'd be bad, but he also conceded that for now, we would be paying for the construction of that wall. And perhaps that might be one reason why the Mexican peso is getting some strength, because Mexico won't be paying for it anytime soon, at least not in the near term. Over the 3-month period, you could certainly see that the peso had started to find a floor over the last week after tumbling in value following the election. And I wanted to mention the pound. It has made its way above $1.06 for the first time since mid-December. So that is a 6-week high. Excuse me, did I say $1.06? $1.26. That's my fault. Traders say there's less uncertainty regarding Brexit after Theresa May agreed to lawmaker demands to publish Brexit plans, and that, of course, follows the UK court ruling that leaves the UK that requires a parliamentary vote to leave the EU.
And finally, on commodities, not much doing except that top commodity there up over nearly 3.3%. That's rubber based on torrential rain in Thailand. So big rubber exporter there. But pretty much everything else kind of quiet. Gold down less than 1%. Crude oil not really going anywhere. So kind of a quiet day on the commodity front.
And those are today's market minutes. We have some breaking news here. You've got AT&T reporting results, earnings per share of 66 cents. That matches the consensus estimate of 66 cents as well. Revenue coming in a bit lighter than what had been anticipated, $41.8 billion for the fourth quarter. Analysts were looking for $42.1 billion. We will be looking through the release to get any kind of insight on and commentary on the company's planned merger with Time Warner. We know President Trump is not a fan of that deal.
And we also have data out from Qualcomm, the company coming in with adjusted revenue of $5.99 billion. That's just shy of the $6.11 billion that analysts had expected. So we're seeing the stock move down 2% there. Also, guidance for next quarter, $1.15 versus $1.25. That's sort of a wider range, estimated at $1.19, so could miss or beat either way. And the EPS beating by 1 cent there. So kind of mixed from Qualcomm, modest beat on EPS, bit of a miss on revenue, unclear guidance, and the stock down about 2%.
And just another mention of AT&T here, some guidance from the company. 2017 adjusted earnings per share will be in the mid to single digits, or the mid-single digits, excuse me, if you back out the Time Warner deal. Revenue growth for 2017 will also be in the low single digits if you back out that deal. And CapEx for 2017 in the $22 billion range. So we'll keep an eye on those shares, currently down 0.7%. Let's bring in Bloomberg's macro strategist, Cameron Kreis, who writes for Bloomberg's Markets Live blog. He actually used to be a global macro hedge fund manager in London and New York, so he's a perfect person for us to talk about Dow 20,000 with, in context, of course.
Dow.
So a lot of excitement about it, but what does it really mean for investors?
Well, I mean, I'll make the obligatory macro guy comment that the Dow is kind of a silly index, which I'm sure you know.
It's price-based.
Yeah, I mean, the bigger picture here, I think, is you've had a breakout of the ranges of the last, say, 5-6 weeks, not only in the Dow, the S&P, but also some of the international indices as well, the DAX. So, I mean, clearly from a technical perspective, I mean, that's pretty bullish. Sideways consolidation pattern followed by, a broad-based upside breakout. And if you look at U.S. equities in particular, what do we have driving it? We've got, a pretty darn solid earnings season, and you've got, the economic data is looking pretty good. Economic surprise indices are at multi-year highs in the U.S. and also in some other parts of the world. Now, there's always a sort of a dark side of the moon, as it were, and there are some risks. The economic surprise is mean reverting, so. As forecasts catch up to past data surprises, there's more room for disappointment in the future. Q1 for the last several years has been seasonally a very poor growth quarter for the United States, perhaps because of lingering seasonal adjustment factors from the crisis. So, you take the under on economic growth numbers for this quarter.
So here's a question that people always pose to me, and I don't really have any ideas about these things, but someone's like, why doesn't the market worry about Trump? Why don't they worry about the fact that he seems to be inching towards further protectionist measures, that he could tweet at any time and either slam individual companies or set off some global political issue in a second? I don't know the answer. People must ask you that.
Well, I think people are worried about Trump, but at some point there's at some point opportunity cost trumps actual cost, and if you see the market going up, you're sort of, in a sense, you're kind of dragged in, particularly when there's a nice technical breakout. I mean, you mentioned the peso earlier. The peso, I think by most standard measures of valuation, got way, way too weak because of the Trump trade, and now we're seeing the payback from that. And actually, he starts saying, we're going to look at NAFTA, we're going to build the wall, and what's the peso done? It's gone nowhere but up.
So here's another way of asking Joe's question: shouldn't there be more of a discount on U.S. stocks, or at least less of a premium?
Well, I mean, I personally would concur with that because, I mean, let's take a step back. Trump wants to change the behavior of corporations. Now, I think it's almost, by definition, that's going to be suboptimal for corporate earnings, because if it were optimal, they would have been doing it before. So there are going to be changes to corporate behavior in ways that you would have to think impact corporate earnings, which, then you add in the idiosyncratic risk of 3 a.m. tweets. There's a reasonable argument to be made.
So we've talked about the Trump. People talk about the Trump rally, this big move since the election. But what we really had, as you explained in your first answer, is we had a rally, then we had a sideways consolidation, and then we've had a further rally. And as you pointed out in a note earlier this week, there are actually sort of two components to the rally. First was the sort of Trumpflation, as you've called it. Now looking from a global macro perspective, what we're seeing more is China-flation, things driven out of China. So let's talk through this shift. And we have a chart here. So what are we looking at, and how have we seen a shift between year-end 2016 and the start of 2017?
Sure. Okay. So the orange bars there are the moves in these various variables from the election night to the end of 2016. So you can see the Aussie dollar went down, the U.S. dollar went up. That's Trumpflation. Happy days. Base metals went up a bit, but the S&P went up a lot more. And then obviously Treasury, those are Treasury futures prices, so you price down, yield up. Again, a very substantial move, all consistent with domestic U.S. Trumpflation. So far this year, and this is as of yesterday, so the actual numbers now are slightly different. The Aussie, which is the classic China 101 play in developed markets, has appreciated as the dollar has gone down.
Best currency this year, I believe, or one of the best currencies.
Maybe the MEX is now.
Right,
yeah. You have to update that in real time. Base metals have been absolutely ripping this year. Yes, there's some idiosyncratic factors. Copper. There's the pending strike in one of the big BHP mines, but iron ore has been up, nickel's been up. So it's that's a classic China story, and until today, U.S. equities have been certainly less impressive.
And speaking of the classic China trade, Xi Jinping was at Davos not so long ago, and he was a pretty vocal proponent of free trade. It's ironic that he was more than the U.S. Can the China replace the U.S. as the engine of global growth? Does it want to? And what needs to happen before that can happen?
Well, I think maybe engine of global growth isn't quite the right way to frame it, and the engine of global consumer demand.
Okay.
Because that's where the U.S. has really been, number one. China has obviously been very, very important for global growth over the last few years. I think the simple answer to this is no. China is a current account surplus country, which means essentially they sell more than they buy from the rest of the world. Now, I was looking at this the other day. Chinese retail sales are actually larger in dollar terms than U.S. retail sales are now. But U.S. imports are substantially larger than Chinese imports, which tells you that China is, consumption is growing, but it's domestic-based consumption. They're buying their own stuff because, you know what, stuff made in China is cheaper for them as well as for us.
Interesting. Okay, I like that. Chinese retail sales in dollar amount is higher than U.S. retail sales. Bloomberg's macro strategist Cameron Kreis, who now writes for Bloomberg First Word. Thank you so much.
Thank you.
Coming up, Jan Stewart, Credit Suisse global energy economist, is here. We ask him what a Trump border tax could mean for the oil industry in 2017. This is Bloomberg. What you missed, President Trump is talking tough when it comes to his plan to penalize U.S. companies that outsource manufacturing. He's already told major CEOs to expect a 35% border tax if they import products back to the U.S. But what impact could his border tax have on the oil and energy industries? Joining us now for more is Jan Stewart, global energy economist at Credit Suisse. Jan, great to have you back on the show. So what are the, there's so much focus on manufacturing, car companies, but traders thinking about the Brent WTI spread, all this could potentially affect oil too. So how do you see Trump's policies affecting the industry?
Unintended consequences, one of the first things that jump to mind. In the first instance, just at the border in that first minute of 2018, when something like this will go into effect, you'd have to believe that the feedstock domestically goes up, right? Then that import a crude barrel, that price for them goes up. So the American crude price goes up. That should, first instance, benefit American producers, just like Mr. Trump says. America's great, right? It would penalize, all else equal, in that first instance, producers that have a market only in the United States or that simply export to the United States. Again, all else equal. The second derivative, I think, would be most likely domestic prices go up. That's gasoline.
Right.
Why would you want to do this, right? What is the first thing you're going to be able to show to all those swing state voters of yours, right, that, oh, here's a bunch of pain, now just wait for the gain? That's a story they've all heard before. So the political risk around this, even though I understand Mr. Trump has pronounced yesterday that it's going to happen, it's going to be great, How great is this really going to be? What are the ramifications? How does a suddenly disjointed, very intricate trading regime then find a new equilibrium? Over what kind of time? Who are the winners and losers, really, in year one? Even that is difficult to figure out. What seems reasonable to conjecture, if you will, at this point is that net, the American shale producers should be among the first to, all else equal, benefit from something like this. And others that export to America, probably not so much, not so greatly.
Couldn't you make the argument that on a principal basis he's going to move ahead with that? And yes, in the first instance that will happen, but somehow it'll find equilibrium, things will calm down, and then you adjust as needed.
Yeah, and things will calm down on kind of what sort of a time frame, right? I mean, here in America, we live, I'm told, on Wall Street by quarterly results. How many quarters does a car part exporter to America into a, I don't know, Fiat Chrysler, how many quarters does he have to wait when Fiat Chrysler is reorganizing itself so as to either manufacture domestically or import from yet somewhere else, right? I mean, the whole, just Canada, for instance, the whole idea is all about a net benefit to America, right? The trade deficit with Canada, I'm told, on balance, in its entirety, is kind of negative 3%. That's it, right? With China, it's something much wider. Canada's relationship with the United States, anywhere, are huge and extremely intricate. The entire car manufacturing supply chain is built on two sides of the border, right? We're going to upset all of that for what? For a 3% gain? Really? Right?
To fulfill a campaign promise.
Of course he will.
What would such a tax mean for refiners and entities that import oil from overseas but then export it again?
You're going to like hate my answer, right?
Okay.
Depends.
That's fine.
Right?
That's a good answer. That's
because
an honest answer.
One of the, again, first blush, maybe somebody says, okay, that refiner that imports more than it exports, probably not so great, right? On second blush, maybe it's simply the case that everybody works with the same underlying commodity price, right? I mean, that American producer now gets to sell oil for that little bit more. What happens to the margin is going to be infinitely more important than what happens to feedstock costs in isolation. So if you as a refiner can manage to hang on to your margin because domestically you can sell your gasoline for a little bit more, then what is really the impact, right? Or if you're a refiner that doesn't only get a better domestic margin or an equal domestic margin, but that can also export, different calculation all over again, right? So the short answer, I'm afraid, is depends also on what time frame, please, what time frame? Because the adjustment, as you said, yes, in theory, which is where this all comes from, this is defendable, right? And apparently it can raise $1 trillion worth of revenue, which is kind of why it's the keystone of the Republicans' plan, if you will, not really so much of the White House plan. And we need to frame the risks around it, frame the scenarios around all of this, and they are sick complex.
So let me ask an obvious and perhaps dumb question. President Trump has promised to make the U.S. energy independent. Is that good news for us, for Americans, in terms of gas prices and in terms of our energy companies' profits? You know what?
Again, this is a promise that, I'm betraying something about myself. Mr. Carter began making that kind of a promise, right? America used to be the biggest exporter of oil until the early 1960s, right? This is something that, of course, can happen. Is it good? Depending on whom you ask, right? Is it good for people in Texas, in the Permian Basin? Of course it is, right? Big picture, truly depends.
All right, Jan Stewart, we got to leave it at that. Global energy economist for Credit Suisse. Thank you very much for joining us.
Anytime.
We have earnings from Mattel. It has just released fourth quarter numbers, and adjusted earnings per share is 52 cents. That is almost 20 cents lower than the consensus estimate. Analysts were looking for 71 cents. I'm just making sure that we are comparing like with like here because it's such a big miss. But again, right now, the market is interpreting it as comparing like with like, and we are seeing the stock down by 10%. Revenue also trailing the consensus estimate, $1.83 billion versus the average analyst estimate of $1.96 billion. So net sales missing estimates and earnings per share missing estimates by a large margin. Mattel shares down 10%. Coming up, with the Dow hitting 20,000, will this drive more companies to go public this year? We're going to speak with the New York Stock Exchange president, Tom Farley. This is Bloomberg. What you missed, now that the Dow has moved beyond 20,000, where does the market go from here? It's a situation that might benefit from an uptick in offerings this year. Joining us out from the New York Stock Exchange is Tom Farley, president of the NYSE. So, Tom, let me start with the Dow at 20,000, because we can't get away from that. Are we at an inflection point? Is this an indicator of positive underlying fundamentals for a healthy market? What's your take?
It's certainly that's the hope. I mean, I remember when I woke up in the middle of the night, November 8th, November 9th, and I saw the Dow was down. I think it was 600 points. Since that time, we've come roaring back 3,000 points, or 15%, and it's basically hope. And the hope is we're going to see a reformed corporate income tax regime. We're going to see a reformed regulatory regime that makes it more advantageous to be a business in the United States, and maybe some infrastructure spending. So there's a lot of optimism. It's manifest in the markets. It's manifest in the Dow 20,000, and it's been a pretty raucous day around here on the floor of the New York Stock Exchange as we hit that milestone number.
Tom, you mentioned optimism. I remember when the Dow hit 10,000, and it was practically a national holiday in America. It felt like they shut down everything and people went into the streets and cheered. When you go around and you, like, on the weekends and you see your friends and you go to barbecues and stuff, do people bring up Dow 20,000 to you? Are people who aren't in finance or whatever, do they care about these milestones anymore?
Yeah, they do. They do. Not like Dow 10,000. I'm not quite sure why Dow 20,000 isn't in the zeitgeist to the same degree. But that's okay with me, frankly, because it's at the end of the day, it's only a number. But my hope is it is emblematic, as I said, of a healthy, growing economy that's going to benefit all swaths of society. And let's hope and let's see if this Trump administration executes on these things that they've said they're going to do, which are really have the potential to be quite good for business.
All right. So we talk about emblematic of hope and optimism. If Dow 20,000 does signal some momentum and sustained momentum, what does that tell you about listings of, or potential listings of companies? How does this change perhaps your forecast of how many companies you'll see listing on the New York Stock Exchange?
Well, first, let me take you back a year ago. So in the first quarter of 2016, we had no IPOs, zero. So obviously we didn't raise any money for corporate America. Companies weren't able to take money that they hadn't raised and invested in their business. Look where we are now. I was just meeting with my team upstairs. We're expecting 10 IPOs in the next 3 weeks, including 4 on Friday. 3 operating company IPOs and a closed-end fund. And by the way, those 10 IPOs, they're really big IPOs. Most of them are raising in the neighborhood of $500 million, $600 million. We have one we expect to raise 500 million, 600 million. One we expect to raise $1.7 billion next week. So this is good. That's great for the economy. Ultimately, that's money that companies can put back in shareholders' pockets. They can invest in infrastructure that underpins our economy. So it's looking quite different than it was a year ago.
Sure, and that's in the short term, and that certainly is quite a bit of money. But what about 6 months out, 12 months out from now? Does Dow 20,000 encourage the companies that are still mulling over whether to go public to say, all right, this is it, this is the signal?
Yeah, so first of all, my success rate at predicting these things is not very high. I will tell you that right now the underpinning for IPOs is perfect. Asset prices are at all-time high. Interest rates are low and stable. Volatility is low and stable. And our pipeline is significant with really great companies. Literally dozens and dozens of companies that are on file ready to IPO. So if we stay in that environment, if these 10 IPOs over the next 3 weeks go well, then I would expect, to answer your question, that the next 6 months, 9 months, 12 months looks like a great year for capital formation.
I want to talk about market structure for a second. News out on the Bloomberg today that on one of your tiny subsidiary markets, NYSE MKT Exchange, you're going to be adding a speed bump. This is similar to the competitor IEX. What does this say about this demand for market structure things that sort of work against high-speed trading? What's the demand out there for that?
Yeah, the demand we have from our customers, in particular the institutional trading customers, is that we offer choice of executing their trades. And so we actually have 3 exchanges. We have the NYSE exchange. We recently announced we're going to increase the number of securities we trade on NYSE to include all securities in this country. We have our NYSE ARCA exchange, which lists 92.5% of all the AUM of ETFs in this country. And we have the NYSE MKT, or what used to be called NYSE MKT. We announced today we're renaming that NYSE American, and we'll be putting in place a speed bump on that market. And really, between those 3 venues, we're giving investors the choice of most of the models that are out there in the world.
All right, Tom Farley, New York Stock Exchange Group President. Thank you for joining us. Tom Farley joining us from the floor of the big board.
Thank you.
Coming up, President Trump today acted on one of the most fundamental elements of his presidential campaign, building a wall on the border with Mexico. We dissect the ramifications next. This is Bloomberg.
In San Francisco.
This is Bloomberg, and of course, we want to give you a recap of today's market action. It was a record day for all three major indexes. The Dow finally breached 20,000, closing at 20,068. And in fact, it got above 20,000 within the first minute of trade. So it's been above that level all day long. The S&P 500 adding 0.8%. Financials, the big leaders there. And NASDAQ, the best performer of the three, up 1%. A lot of big tech earnings coming up in the next 2 days. So we'll be looking for those. After the close, we saw AT&T report earnings, adjusted EPS of 66 cents, matching the consensus estimate. Revenue was slightly below what analysts had been anticipating. The stock is up 0.6% growth. The growth projection, I should say, is in line with analyst estimates.
And after the bell, we also got earnings from Qualcomm. The stock falling a little bit after hours, down 1.3%. Sales came in light of analyst estimates, around $5.99 billion. Analysts were looking for $6.11 billion. And EPS beat, but just by a penny. So Qualcomm down 1.5% after.
And just crossing the wire, eBay coming out with results that beat analyst estimates. If you're looking at adjusted earnings per share for continuing operations, 54 cents. Analysts were looking for 53 cents. Revenue also coming in bang in line with what they had anticipated, $2.4 billion. The stock is down by 0.75%. The first quarter net revenue forecast, the midpoint of that forecast, trails the consensus estimate. So that might be why the stock is under a little bit of pressure right now.
It sees Q1 adjusted EPS from continuing operations of 46 to 48 cents. As you said, adjusted net revenue bang in line at $2.4 billion, exactly where estimates was. But it's some of that outlook that's a little bit shy of expectations. However, stock up it's going back and forth. Not a huge move after hours for eBay.
Well, where we are seeing a huge move, though, is in Mattel. Take a look there. Shares are down by greater than 10%. This is the toy maker. Earnings per share, 52 cents. Analysts were looking for 71 51 cents. So that is a huge miss if the numbers are like, we're comparing like with like here. Net sales for the quarter, $1.83 billion. Analysts were looking for $1.96 billion, but clearly the holiday earnings, the holiday sales, I should say, and the earnings were not up to par.
What'd you miss? President Donald Trump acted on two of the most fundamental and controversial elements of his presidential campaign: building a wall on the border with Mexico and tightening restrictions on who can enter the U.S.
We are going to get the bad ones out, the criminals and the drug deals and gangs and gang members and cartel leaders. The day is over when they can stay in our country and wreak havoc. We are going to get them out, and we're going to get them out fast, and John Kelly is going to lead that way.
Joining us now from the White House is Bloomberg politics reporter Kevin Cirilli, also from our bureau in Mexico City, Bloomberg Latin America economy and government reporter Eric Martin. Kevin, let me start with you. This was an executive order, unlike the action taken yesterday, which was a presidential memoranda in which the president ordered the construction of the Mexican wall. But what needs to be done by Congress to move this forward?
Well, this was campaign rhetoric repackaged in the executive branch. And now, of course, the ball moves to Congress, where top Republican leadership, including people like House Speaker Paul Ryan, are already meeting with their advisors on how exactly to move the president's agenda into a budget. Of course, the bottom line is that there is no agreement in terms of what exactly this bolstering of border security along the U.S. and Mexico border will look like, how big exactly that wall will be and how high, or whether it will take various iterations with fencing and cyber and drone items as part of this bolstering of security. The bottom line is this: there are several different ways, according to officials that I'm speaking with, this could be crafted, including as part of an economic stimulus plan that the president has really been pushing, particularly on infrastructure. A lot underway here, a lot that will continue, legislative agenda still being crafted out.
Eric Martin in Mexico City. So today's news shows, if nothing else, that wasn't just campaign rhetoric, that Trump, at least for now, following through with what he talked about on the campaign. So how's it playing this news today in Mexico?
Joe, this is an announcement that folks in Mexico were expecting. As you mentioned, Donald Trump talked about this early and often on the campaign trail. And the Mexican officials are moving forward in terms of trying to preserve the NAFTA trade deal and the benefits that it has for Mexican exporters, for U.S. manufacturers making foreign investment in Mexico. And also, as Kevin mentioned, some of this may take place on the Hill in terms of relying on allies of Mexico in Congress from states like California and Texas to make the case for a border in which goods and trade can flow. Mexico understands, and Foreign Minister Luis Videgaray understands, the U.S.'s right as a sovereign nation to protect its borders. But Videgaray was adamant yesterday that Mexico will not pay for the wall and that they're looking to continue the trade relationship they currently have with the U.S.
And Eric, let me just follow up, because during his remarks, President Trump also said that he believes that the wall will save lives in both countries and that U.S.-Mexico relations can actually improve even with this plan to construct a wall, whether it's metaphorical or physical. Do officials in Mexico share that view?
Officials in Mexico have been talking about this as a really comprehensive relationship between the U.S. and Mexico. You know, it involves trade, immigration, security, also cultural exchange. There is a concern from the Mexican side about the amount of weapons, guns bought in the U.S. that have been flowing the other way across the border south in recent years and helping to arm criminal groups in the nation's drug war. So there is a feeling in Mexico that while the wall is important and Mexico will never pay for the wall, that the relationship goes far beyond simply the border and that particular issue.
Kevin, do you, at this point, what is the administration's agenda for getting Mexico to pay for the wall, the other half of the wall promise?
I can remember when I covered then candidate Trump's visit to Mexico City to meet with Mexican government officials with Eric. And that was a key question then, and it's still a key question now in the Trump administration. But here's what I can tell you. Behind the scenes, what they're talking about are things like remittances, talking about using leverage with Mexico and U.S. trade agreements, with NAFTA, as Eric pointed to, and then also trying to find key areas of bi-nation agreement, particularly on the issues of law enforcement. We heard, of course, President Trump earlier today really adopt a much more compassionate tone in trying to pitch this plan, saying that the two countries could work together on issues like fighting drug cartels. Of course, this all comes on the heels of right before the two leaders are set to meet next week face to face. They're going to have a lot to talk about, I think.
Absolutely. Eric, what would constitute a success for Peña Nieto when he meets with President Trump next week? What is the Mexican government looking to get out of that meeting?
Scarlet, preserving NAFTA as a working free trade agreement. The Mexican government has set forth several goals, preserving the flow of remittances, allowing for the free trade of goods without tariffs. And one of the cards that Mexico holds in this entire encounter is security cooperation. Mexico has been cooperating very well in recent years with the U.S. on issues like counterterrorism efforts and the war on drugs and on crime. And so that's one area where Mexico can say we're working well together. We recently extradited El Chapo Guzman to the U.S. And so if you want to continue working well as two countries on this and other issues, let's keep and preserve what we have in terms of NAFTA and North America as a manufacturing and export bloc.
All right, Bloomberg's Kevin Cirilli and Bloomberg's Eric Martin in Mexico City. Thank you very much for joining us.
Thank you.
Coming up, 3 out of 4 FANG names are reporting earnings over the next 7 days. We'll give you a preview of Facebook, Amazon, and Alphabet earnings. This is Bloomberg. I'm Scarlet Fu. What'd you miss? With President Trump's sometimes hostile interaction with the media and a wave of potential industry M&A as a backdrop, watch for the media sector to be a major focal point in 2017. Comcast is already ahead of the curve after buying NBC Universal years ago to become a vertically integrated company. Now, ahead of Comcast's earnings, let's look at the cable giant in today's The Numbers Don't Lie. In the third quarter, Comcast added more video customers than projected, toughing it out even as investors worried over online competition. The X1 video system at Comcast helped with the additions as it made it easier for customers to use that service. Now, cable TV video is Comcast's biggest revenue generator. Here's the breakdown. Cable, which is the orange slice of the pie, leads other divisions like high-speed internet and NBC Universal's broadcast networks, which is the blue slice, 15%. Over the past few years, market saturation led to a slowdown in annual video revenue growth. Video, which is the blue line here, is a laggard. It did, however, see growth rebound to more than 3% in 2015 and then accelerate to 4.5% in the third quarter. Thanks to President Trump's election race with Hillary Clinton, Comcast's MSNBC network, I should say, saw a huge spike in viewership through November, but that did later normalize in December. The election boost caused NBC's total cable network ratings losses to slow to 4% in 2016. Now that the election is over, we have to see how that trend plays out. One focus for Comcast in 2017 is the convergence of mobile and video. This strategy centers on a quad play package that bundles video, internet access, phone, and wireless. More than 70% of Comcast customers are either on double or triple play bundles. Another major mobile play for Comcast is a possible purchase of T-Mobile, but keep in mind there are no shortage of competitors. Potential suitors for T-Mobile could be Dish Network, Sprint, as well as CBS. We'll be following Comcast's earnings when they're released before Thursday's U.S. opening bell. Joe?
Thanks, Scarlet. We also have a slew of big tech earnings coming up very soon, with Intel, Alphabet, and Microsoft leading things off tomorrow, and Apple, Facebook, and Amazon coming next week. Joining us to give a preview to these earnings is Bloomberg News consumer technology reporter Mark Gurman. Mark, great to have you on set. So let's talk about some of the big themes and ideas we're going to be watching for with these earnings, starting for Alphabet. What are you going to be most interested in what they say tomorrow in the release and on the call?
Well, as we know, Alphabet is primarily an ads company. That's where they make the majority of their money. But they do have a lot of other things going on. They have these Skunkworks projects, Google X, basically whatever Sergey Brin wants to work on, whatever he thinks is cool. And a lot of it is cool. But 2016 is the year where they really started to try to make profit and revenue on hardware. They had two really key new hardware products this past year, the Google Pixel phone, which is reviewed as one of the top Android phones, and the Google Home product, which really takes on the Amazon Echo. It'll be very interesting to see if they break out numbers on those. Maybe we can get an idea on margins, how they're really competing with, of course, Apple and the iPhone.
So is the goal for those businesses to be profitable or to be meaningful profit generators?
Well, I think we can look at profit in terms of two ways on these Google products. We can look at it in terms of ad sales. We can look at it in how much money they're making off of who they're allowing to tap into the products, what kind of data they're getting on the customers that are speaking to these products through the assistant. But also, hardware margins in the smartphone industry are very important because Apple doesn't sell the most phones, but they make the most money on the phones. And as we all know, it all comes down to money. So Google's going to want to play there eventually.
All right, well, let's skip ahead to next week. Apple, that's you know more about Apple than probably just about anyone else in the world. So what do you think is going to be the big question investors want to know about Apple this last quarter?
Of course, it comes down to this. Is Apple still a growth story? Is Apple going to return to growth? Are the revenue numbers in this Q1 holiday quarter going to be higher than Q1 of 2016? Apple's indicating yes. A lot of the analysts are indicating yes. But this is especially important because for the first time in over a decade, Apple had multiple quarters in a row in 2016 of a lack of growth. And if the growth story is stalling, that's bad news for Apple and investors because that's when the company starts really turning from this success story and really turning into something that's more like every other tech behemoth.
You know, I'm coming inside the Bloomberg for a moment here because when I look at analyst recommendations for Apple, this is the A&R function here. We can see that Mark Moskowitz of Barclays recently downgraded his recommendation on Apple to equal weight, had been the equivalent of a buy before that. And so it seems like there's been a couple of downgrades, more caution towards Apple. What's driving that thinking?
Well, we have to step back a little bit and think about what drives the Apple stock price. It's basically their sales, their revenues, among other factors. But what drives that? It's the products. It's the innovation. Do people want iPhones? If we look at the past 5 to 10 years or so in terms of Apple's stock graph, what really makes the stock jump? What's the anticipation? I remember particularly about 5 years ago in 2012, it was the iPhone 5. This was the first time they were going to increase the size of the screen, the first major product after Tim Cook taking over as CEO. The stock went up over 700 at that point. This is pre the seven-way split. And then the stock really went down after the product cycle really slowed. I think we're at that point again where people are going to start getting really excited about the iPhone 8 coming out at the end of this year.
You know, you talked about how Google, one of the tests is, can they diversify the business? Also, people ask that about Apple. It's still fundamentally an iPhone company. They've introduced other hardware products. They supposedly want more credit for their cloud. Is anything happening interesting business-wise on the non-iPhone part of the business?
Right, and it's scary, isn't it, as a CEO or as someone running a business to put all of your eggs in one basket over 2/3 of the company? But clearly they're looking to do more. The services business is growing rapidly. They're making a lot of money on iTunes, apps, iCloud, different services, the Apple TV. But also they're looking at new areas. They're looking at self-driving software for cars. They're looking at new home products. They're looking at augmented reality. But we haven't seen any physical evidence of this yet. And I don't know if we're even going to see that this year. We'll see.
So in the meantime, Facebook really has to rely on those daily average users, monthly average users to drive the metric here for the company. That's what investors end up looking at too, isn't it?
Right. Everyone just cares about the daily active users, and especially now more than ever on mobile. And today they came out with this new Stories feature. It looks just like what they have at the top of Instagram and what Snapchat has. So it'll be very interesting to see how they present that. Are they really going after the Snapchat market or not?
All right, Mark Gurman of Bloomberg News. Love getting your perspective. Thank you very much for coming on.
We're going to stay on technology here because Facebook COO and, of course, lean-in author Sheryl Sandberg sat down with Bloomberg at Davos about how companies can change the face of leadership. That's coming up in today's Walk the Talk. This is Bloomberg. On today's Walk the Talk, we rounded up the best and brightest media and ad executives at the World Economic Forum in Davos. And we asked about where women fit into industries that are long dominated by men. Susan Creedle, the Chief Creative Officer at FCB, kicks it off.
If we didn't create the problem, we exacerbated it by that question. And then I think the other thing that happened is television became a mass way to advertise. And the 30-second commercial, to me, and especially at that time, a lot of it was 30 seconds. It went from 90 to 60 to 30 to, in the 90s, 15-second communications, which if you think about 15-second communications, they're really a joke, right? So it's a setup and a dunk. I watched guys growing up in locker rooms and the way that they talked with each other. They had been practicing that their entire lives. Whereas women, I think, or at least for me, how I grew up, have been much more philosophical, thoughtful, empathetic. And in a 15-second commercial, or even a 30-second commercial, there's not a lot of room for that muscle.
The news cycle is moving extremely quickly. We have a very fragmented ecosystem in terms of where people are receiving their news, and it's very difficult to fact check. And even if you do fact check, the many individuals who may have seen the false piece of information, to be able to reach them and let them know it was false, you're sort of chasing always behind. So I think that's again, that existed prior to the election, and it's going to exist even more so, I think, moving forward.
We also spoke with Sheryl Sandberg, the COO of Facebook, who hosted a panel at the World Economic Forum. She talked about how companies can shift unconscious biases and why men need to join the fight.
You have to give women a safe place to raise the issues, because the really big stuff, the sexual harassment, that stuff still happens. I'm not saying it always gets reported, it doesn't, but there are systems in place to deal with it. If you are really sexually harassed, at least there's an HR person you can go to and do a complaint. But really, and that's hugely important, and I know we need to do better. But what happens when, like, you're getting interrupted in meetings? You're going to go complain about your boss, who's probably a perfectly great guy who thinks he's fabulous on women? That's what's happening, right? It's these paper cuts, but these paper cuts are the culture, are creating the problem. And you can't go, like, file an HR complaint. I got interrupted, right? Even though, let's be clear, those are the biases holding us back. So one of the things that's happened, we launched Lean In Circles with my foundation when we launched Lean In 3 years ago, and there are 31,000 Lean In Circles all over the world. Half are in companies. There are 70 at Chase, for example. They give you a safe place to anonymously give that feedback. So rather than your perfectly nice boss who thinks he's fabulous on gender being told he's interrupting women more than men, or being told he's giving men credit for women's ideas, which he probably doesn't know he's doing. We provide training, but more importantly, these circles give you a nice anonymous place, and then the circle leaders can meet with the head of HR, or in great companies with the CEO, and say this is happening. And then you can do the bias training with the data from your own company. So it is huge to acknowledge we have the problem. And I think the third thing is, and UN Women has led here, is we have to give men a reason to participate. And again, I think it has to go back to what's good for them. It is the right thing to do, no doubt, but we've known that for a long time and it hasn't happened. So if you are a man, why should you be a more active husband and father? Why do laundry? Other than the fact that I tell men all over the world you're going to have more sex if you do laundry. That's a really good reason. But why do it? Why do it? Because you're going to have a happier marriage, because the divorce rate goes down, because depression for your wife goes down. Why do more childcare and try to get the balance a little more even? It's not even anywhere in the world. Because your kids, and this is regardless at any income level, are going to do better in school, be healthier, happier, and better adjusted. That's a really good reason to do more housework and childcare. If you're a man in the workplace, why? Because if you can use the full talents of the population rather than half, you're going to outperform your peers. And that's true whether you're the entry-level employee where no one reports to you, but you're just better to work with, or you're the chief marketing officer of Unilever or the CEO. You're going to do better. And so I think if we can convince companies to market to women against stereotypes because it'll sell their products. If we can convince men to do their share at home and to fight gender bias in the workplace because they'll be happier, more successful in both fronts, that's where the win is. And the good news is, as all of these amazing panelists have said, the data's on our side.
That was Sheryl Sandberg, Facebook's COO, speaking in Davos. Cheryl?
Thanks, Scarlet. We have one breaking headline here from the AP. President of Mexico considering canceling that upcoming trip to the United States. So something to keep an eye on. It had been scheduled. And, of course, today we got news about Trump planning on the wall. So we'll see if this meeting actually happens. Coming up, what you need to know for tomorrow's trading day. This is Bloomberg. And we want to reiterate that breaking headline we talked about just before the bell. The president of Mexico, according to an official cited by the AP, considering canceling an upcoming trip to the United States.
In terms of what's happening tomorrow, President Trump and UK Prime Minister Theresa May expected to attend and speak at the Republican retreat in Philadelphia.
And coming up in the next hour, Bloomberg Technology will break down what was supposed to be the first big tech IPO of 2017. This is Bloomberg.
And you're watching Bloomberg Technology. Let's start with a check of your Bloomberg First Word News. President Trump signed 2 executive orders at the Homeland Security Department today, one to begin construction for a wall along the U.S.-Mexico border and another to restrict aid to sanctuary states. He spoke to ABC in his first interview since the inauguration.
Ultimately, it'll come out of what's happening with Mexico. We're going to be starting those negotiations relatively soon, and we will be in a form reimbursed by Mexico, which I've always said. So they'll pay us back? Yeah, absolutely, 100%.
The Trump administration is lining up executive orders to reduce the U.S. roles in the UN and other organizations. That's according to the New York Times, which says the Palestinian Authority and states that support terrorism are also targeted. The AP reports the administration wants to stop accepting Syrian refugees and plans to delay issuing visas to citizens of 7 Muslim-majority countries. Former President George H.W. Bush could be home this weekend. That is according to a statement from his spokesman, who says despite a lingering cough, the former president's lungs are clearing up. And actress Mary Tyler Moore has died. Her publicist says she died with her husband and friends nearby. She was 80. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg.